Hello, I'm Debbie Bell-Hosking for FinextraTV at EBAday 2025 in Paris. And I'm joined by Daniel Stanton, Bank of America, to talk about payments. Daniel, a big welcome here to our busy EBAday.
Thanks for having me.
We're talking payments.
We are talking payments.
Is the banking platform optimistic? In other words, are we moving in an optimistic direction, do you think, in this landscape?
I think we are. I really think we are, and I believe we have a lot to be optimistic about. It's a very interesting time in payments right now. We're seeing so many innovations that are really driven by a few different things. They're being driven by client demand and supply. They're being driven by the consumerization of client expectations, as we like to call them. We're all consumers in our day-to-day lives, so there's a level of instant gratification that we have, and banks are at the forefront of that innovation. One of the key innovations that we talked about quite a bit here at EBAday is instant payments and being able to move value from one place to another instantly. But it's not only about speed, but it's also about accessibility, it's about interoperability, it's about transparency and cost. Equally, if not more important than speed. So we have a lot to be optimistic about. There's a lot of change that is occurring in this industry, and I just really look forward to the second half of the year and even going more so into next year.
Well, I'm going to pick up on that then, talking about the second half of the year. What developments are we seeing more this year, that we're talking about more this year, that perhaps didn't get as much airtime last year?
Well, that's an interesting question. I think this year we're going to continue to really drive on the themes that we've heard a lot about last year around certainty and stability, and being able to mitigate risks that are out there in terms of volatility that are in the market. So, clients are really looking for safety when it comes to their payments. And as we mentioned in the first question around instant payments, there's the trust factor that is out there. Our clients are accustomed to being able to go on into their mobile app or their banking application, make a payment, and have a level of trust and certainty that the payment will get there. Now, currently, there's a lot of friction in payments today that instant payments is helping us to solve for. But if we tie back to the certainty and the risk mitigation aspect of that and the volatility that's in the market currently, I think we'll hear that talked about a lot more. Clients looking for tools that allow them to forecast appropriately, especially when we're talking about instant payments, but also allow them to mitigate their risks from a market volatility standpoint. So capabilities that we have at Bank of America, such as guaranteed rates, things of that nature, to allow our clients to implement a little bit more certainty in their day-to-day, and then identifying different ways to invoke a bit more trust in the financial market.
And you're talking about building trust in the financial market and also becoming less friction, more frictionless, yes, shall we say, is a better way of saying it? Yes. Where do you stand on that debate of regulation versus innovation?
Well, I think of regulation as a way to kind of control what's going on and put some guardrails in place. So I definitely think there's a need for smart and intentional regulation in the banking industry, especially in the payments industry. But what we're seeing globally, especially Bank of America being a global institution, we're seeing a lot of innovation that is being driven by regulation. So it's not to look at regulation as a negative at all. In addition to the consumer demand driving innovation and driving where we go from a payments landscape, regulation is now doing that as well, and it's unlocking a lot of potential. In payments, we're seeing a lot of clearings around the globe that are going instant, that are having an additional focus on things like requests for pay, validation of payee, and things of that nature, which are risk mitigation measures which invoke trust in the banking system and in the payment industry, and allows us to continue to move forward being a trusted industry, or trusted entity rather, in the payment landscape.
Daniel, thank you. I mean, this payments landscape, having spoken to you in our conversation, is definitely a lovely positive and forward-moving lift, I feel. So thank you so much.
Thank you for having me. Really appreciate it.